Hi, I'm Todd Jordan, Managing Director at Hedgeye. Welcome to our studios in Stamford, Connecticut. Joining me today is Kevin Kaiser, who runs our energy sector coverage. Kevin has been one of the most vocal voices about the accounting practices of master limited partnerships, or MLPs. Today we're going to talk to Kevin about LINN Energy, an MLP that just reported earnings and held their conference call on Tuesday. Welcome, Kevin.
Hey, Todd. How are you?
I'm good. So LINN Energy reports.
Yep.
They hold their conference call, and you've got some issues that you have historically focused on with this company. One of them is distributable cash flow.
Right. So distributable cash flow, this is the metric that everyone else looks at when valuing this company. And LINN reported distributable cash flow of $173 million in the quarter, which was better than a lot of people expected. The problem is that distributable cash flow, it's not at all representative of this company's economic reality. By my estimates, the company was actually free cash flow negative by about $80 million in the quarter.
Oh, wow. Okay. Now, I know maintenance CapEx is kind of an issue as well. How does that flow through the equation?
Right. So maintenance capital expenditures is deducted from EBITDA to get to distributable cash flow.
Okay.
And we've got a graphic up here that shows the difference between maintenance capital expenditures and how that impacts free cash flow and distributable cash flow. And as you can see, that maintenance capital expenditures in the quarter was about $116 million. But the company actually spent around $340 million in total CapEx, and the company's not growing, which is a big problem.
Okay, understood. Now the other part of the story, I guess, is this acquisition of Berry.
Right. So LINN, for the last 9 or 10 months, has been working on closing Berry Petroleum. And the big news this week was that they upped the deal price for Berry Petroleum in order to get this deal done. The management team is saying that it's going to be accretive to distributable cash flow, but again, I think there's a significant maintenance CapEx problem. I think that LINN is understating Berry's maintenance CapEx.
Okay.
They're saying it's going to be about $240 million, somewhere in that range. And I think the real number is probably more like $400 or $500 million, which would wipe out all the accretion in the deal.
Got it. So it sounds like you're still negative on LINN Energy.
Yeah, I mean, nothing's really changed my views on LINN Energy at all, actually. And I still think that the company's worth a lot less as trading at today.
Okay, great. Very interesting. So Kevin, thanks for joining us, and thank you for watching. I'm Todd Jordan. If you'd like more information or have other questions, you can follow us on Twitter. Kevin's handle is at Hedgeye Energy, and my handle is at Hedgeye Snake Eye.